Good morning, good afternoon, good evening, folks. Michael Zuber, one Ritzel at a time, back with his Wednesday expert in front of the channel, Anna Kelly. Hi, Anna.
Hi, Michael. Good to be here.
Nice to be with you as well. So we're going to talk about something that I have not talked about in 3 years. I can't believe there's a topic I haven't hit, but I've saved it just for you. You ready?
Oh, I'm scared and honored at the same time.
No idea what's coming. But what I want to do is I want to share with you this market psychology, I think they call it, the cycle of investor emotions.
Yes.
I'm sure you've seen this before.
I have.
And, you know, this is honestly something I didn't appreciate until after I got smacked in the stock market. And then once again, experienced it in the real estate cycle, because what I realized in the real estate cycle after attending an event with Bruce Norris from Norris Group is that single family was in trouble. And we got out at near the top, and we obviously saw what happened. So I'm sure you've seen this. When you look at this, you know, what comes to mind?
So yeah, in short, reluctance is kind of when you're in recovery. You've already been through a recession. Things are starting to get a little bit better, but they're not quite there yet. And as the economy and real estate specifically start to recover, you realize, wow, the market's just going up. This is really exciting. I'm making a ton of money. And then you get close to the top and you just think things can never get worse. It's just going to get better. I'm all in. Right. And we see that a lot right now. And Warren Buffett says, be fearful when other people are greedy and be greedy when others are fearful. That and number 2 rule, never lose money, right? Yeah, and I think about those things. And in 07, I was killed by 08 and 9. We were in that exuberance phase. And then we came down and all of a sudden you're like, oh my goodness, this is bad. But maybe we'll be okay. Maybe it'll bounce back. And then you get to fear and then you lose a lot of money like I did in 08, early 9. You get, in despair, you panic and it's like, oh my gosh. And so you hit a bottom, you hit a recession, you lose a lot of money and you just think this is hopeless. I'll never get this money back. I went through that in 09 and early 010. I was at that point of despondency and depression because I lost 3/4 to 2/3 of my 401k and was losing my job when we went from exuberance, and started down the downward spiral. And then, during recession, you start to kind of pull out into recovery. And as recovery starts to happen, you're like, should I go back in? I don't want to lose money like the last time. Is this really getting better? And a lot of people drop off and never invest in real estate or the stock market again because they're just really worried and they're reluctant. They don't know what to do and they don't want it to happen again. So when you get to this peak of exuberance, this is actually the optimal time to sell. Whatever it is you have, generally speaking, if you're going to sell certain assets that you don't think will weather a downturn in the economy, you sell when you think we're at the top. And the time when you're despondent and depressed, you're at the bottom. It's actually the best time to buy. Yeah. And so what you have to learn from this is that our emotions are not a good indicator of a wise investment. Agreed. And it's really hard to talk yourself out of that because we see it as emotions, but the actual reality of what happens to people's finances, losing jobs, losing homes, it's really easy to say, oh, just snap out of it and buy more. But if you've lost everything, it's really hard to buy more, not only emotionally, but in terms of from a credit perspective and whatnot. So those of you that have already gone through some of these cycles and you've built up a lot of money during this height from reluctance to exuberance, you better be holding on to some cash. You better be getting rid of some of the assets that you think won't weather a recession. And when things hit the bottom or you think we're close to the bottom, that's when to take some of that cash. If you've lost a job, if some of your people aren't paying, and you use it to get through that period without despondency and to buy more as you're able. And that's what I've kind of learned about these cycles of emotion and what they speak to what's coming next and how we should plan.
Yeah. There's a couple other things I take from this because all of that is spot on. One signal that I look for the sign of exuberance is when is the next idiot going to say he's better than Warren Buffett? Right? We had David Portnoy of Barstool Sports say, I think it was 18 months ago, that he is whooping Warren Buffett's butt. And he is, he's, blah, blah, blah. And again, it's what we thought in '06. It's what we thought in 2001. Like Warren Buffett is out of date. It is so predictable when you get that next idiot that thinks they're a better long-term investor than Warren Buffett. And he was quoted. I mean, you could go to Google and type in David Portnoy owns Buffett or something like that. It's a quote.
Right.
And I see stuff like that. I'm like, we're close to the top. Very
simple. And when investors, pitch you deals, and, I'm in commercial, so I get pitched, apartment deals all the time. And in fairness, I buy and I own and I syndicate apartments. But when 90% of the deals that I have say, I'm taking bridge debt because it's only going to get better, and my rent projections are going way up because it's only going to get better. And when I refi, rates will be back down, so it's only going to get better. When people are so optimistic about the future, to be able to return you, 4, 5, 6% on your money, you better be a little bit nervous. We're probably at the point of denial, like between exuberance and denial, thinking that things are only going to get better.
Yeah. The other thing that I know of in this chart is if you're not paying attention, you won't see it, but the down cycles are like elevators, right? You take the escalator up, but you take an elevator down.
Good point.
Right. It's much, much faster. And then the other thing to talk about is everybody wants to know where we're on this chart today. Well, folks, every time I turn around, I see articles about buying the dip and, this will be over soon and this and that. So we are somewhere between denial and fear. We have a long way to go in some assets. So, some of you are hoping we were at panic. You're not anywhere you're not at even close to capitulation. Capitulation is I am never going back. That there's fraud. You're not talking about buying a dip at capitulation. So I think there is a ton of room to the downside.
Yeah, I do too. And to your point about this being, an escalator up, a lot of expansions, most expansions, they get progressively longer, right, before the next contraction in the economy. But we were in the longest expansion period, which since President Abraham Lincoln was in office, which was actually 11 years before we hit a mild recession in 2019, before the pandemic came. And the government kept us propped up. So we were in this exuberance, even in the midst of some fear, maybe in denial in the midst of some fear, through the last 2 years of the pandemic, because we had money keeping coming to us. And we're like, we can't bet against the US government. Things are just going to get better, right? But typically, when a recession hits, it's deep and fast, to your point. And I like how this graphic, does have a stronger down slope. But essentially, you might have a 10-year run up to expansion, and you might have a 1 year to even 2 year, but probably more like 1 year deep dive. And so you've got to watch these things really quickly. And the stock market just corrected, and rates are going up, and housing applications are down. We're kind of in that between denial and fear in the markets. And it could be very quickly, let's see what the Fed does March 10th. Let's see how deep this war goes, because those things really impact the level of desperation and panic that kind of calls for a sell-off of the stock market, and panic and other things, like real estate to some extent. So watch these things, but just be prepared that, if you can weather, usually recessions, once they start, and they're not official till 6 months later, right?
Exactly. Yeah.
It's 2 quarters of negative GDP growth. So you may not know technically we're in a recession for 6 months, but they usually last 18 to 24 months. The worst usually lasts about 2 years. So if you can take some of this money, maybe sell a few more things that you don't think will weather the recession, and weather 2 years of this, and realize, I know things are going to be bad. Everyone's going to tell me I should sell. I'm going to panic. Weather it for 2 years, and you'll be right back to, recovery, and you'll be glad that you stayed in and you didn't sell when you panic. Because the biggest thing that makes people lose money is they buy at the top and they sell when they panic. And as investors, we have to realize we're going to see all these things all around us, and we're going to go, am I smarter than those guys who are selling everything? And then you start to question yourself, like your head against your feelings, right? But if you understand that these are cycles that happen over and over and over again, and condition yourself that I'm going to sell high, buy low, or I'm going to refi high and keep those good properties and then buy low, the better you'll do as a long-term investor.
Yeah, and the last thing, kind of wrapping our hour up together, is I see no signs that we are in panic or capitulation. I know people want me to say that's where we are. We are not there, right? Panic and capitulation is not, again, everybody's talking about still buying the dip and all of these things. That is not a sign of panic or capitulation, right?
Yeah,
we're somewhere between denial and fear, in my opinion. Anna, thank you for your time today. Where can people find you?
You can find me on REIMom.com, greaterpurposecapital.com if you are a accredited investor that wants to invest in syndications, and social media at Anna Kelly, REI Mom.
Thank you, Anna. Have a wonderful week.
Thank you. You too.